If you are still looking for profitability and consistency to the market, then this is for you. First, you have to seek simplicity. You have to focus on finding very simple things which have accuracy to the market. I have decided to say this because I see a lot of beginners and newcomers to the industry. They are trying to go into a lot of complicated things, a lot of theories which are not even necessary for a person to know so they can perform into the markets. Actually, I'm not here to say this works more than this, or certain strategy is complicated more than this. I'm not here to say maybe this strategy is more complicated, so people they have to learn this or this have no accuracy. But what I'm here to say is there is a lot of things which you can figure out and find a very simple way to approach the market, and you still have very high accuracy and very chances to become profitable. So that is all. And in this, what matters most is the more things are complicated, the more it will take you a long time to master, the more it will take you a long time to do, the more it will take you a long time to become familiar with the strategy, with the methodology. So you have to find a very simple thing which you can take a very short period of time to learn, but also not just simple things with accuracy. And when we go to simple things with accuracy, it is where I get into my second point, which is very, very important point. And this is, as a professional trader, you must have a statistical data to support your strategy, a statistical data to support your methodology. And what I mean by saying this is, maybe you are new to the industry, or even you are legend into the industry. What we're supposed to do is, after learning or after being into a strategy for a while, you have to start collecting statistical data of your strategy and your reasoning. So let's take an example of 5 entry models, or certain things which you consider when looking to an entry or exiting to the market. So to collect a sample for at least 200 trades or 400 trades on a single reason, either it is exiting reason or execution reason, you have to collect the data and see on this same reason, in a series of 200 trades, how many trades I'm going to win, how many trades I can take losses, and there is chances of how many trades to become break-even. So this series of statistical data can give you a chance to understand more your methodology, what works more in which pair, what works more in which market scenario, what works more in which market trends, and all these things. And one of the very important things which makes me recommend most people to have a statistical data on their strategy or methodology or a reason for exiting trend or execution is help you to overcome a lot of unnecessary emotion. Let's take an example of a series of 200 trade data, and then you are aware that out of 200 trades, these are the number of trades you win, these are the number of trades you lose, and these are the number of trades you take a break even. And then you are entering into a new trade and you take a loss. You will not become too much surprised because you know in your series of 200 trades, losses are unavoidable. And it is random distribution of losses. It is not that next trade or series of 5 trades will be win and then 1 loss. 5 trades win or 10 trades win, then loss. It is random distribution. Even the coming trade can be the losing one. Even the coming trade can be the winning or the break-even. So that is all. After saying all this, let's come and experience the simplicity into the charts. You are mostly welcome. The first thing, I have this JPY basket view. At first, I was looking on JPY basket on this way. I was looking like we are coming from testing a certain price level. Right here, it is price reaction originated from a diminution, and then a second price reaction originated from the diminution, and it is diminution of low time frame. I don't remember exactly the time frame, but let's look right here. It was this one, diminution of this one, how time frame, the first test. So this one was just the second test. Did you hear me? Hello.
We can
Yes,
hear
We
you,
can hear
Mr.
you.
Lee.
We can hear you,
Yes,
brother.
no fear, no fear.
Okay. So I was thinking like uh, this is the first impressive move in this currently move. So starting of the move, then lower low. So entire this movement, I counted it as a movement to create a lower high. And this is movement to create a lower low. But up to now, we have not yet created a lower low. So I said that GBP JPY set up at first because I was thinking like we are going to get a lower low, we're going to create a lower low, and then this can act as just a psychological price level. But in the low time frames, I have seen you have started rejecting on this level. So I'd say just to stay out and wait what will happen on GBP JPY. Though on GBP JPY again, we have got the 45 minutes candle below. I will show you later. So this is what I see currently on JPY basket. My long-term view is creation of lower low, but currently you can get some sort of counter trend before continuing with creation of more lows. So this is what I see on DXY. The same as how Mike explained. I see like we are going to have movement to create a new high, and here in low time frame we have this lower low, lower high, lower low, and then you break. So we can have a movement to test and then create series of more highs. Then after, let me look on these other prayers. Example this GBP CHF. In GBP CHF, from my side, when looking on this most recently structure, I mean this one, as we know, the general structure we enter the downtrend. The general structure we enter the downtrend, and this movement is just part of the correction. So when focusing much on this recently structure, it is in this way. Here I've considered as starting of the trend, then lower low, then correction to create a lower high. We discussed this entry on the last week. Then we create a lower low. Then here we got this movement to create a higher high. I mean lower high is the movement to test elimination. And then we got the creation of lower low. And then after creation of lower low, I have counted this movement as just a movement to test a lower high, or to create a lower high, I mean, on this level of elimination right here. So we have already tested that level, and currently we are looking to create a lower low. So I'm still holding this selling opportunity, but also expecting to add another opportunity on this level and create series of more lows. So as you see right here, you have this lower low, lower high, lower low, which aligns with our elimination, which it is also validation price level. I went into these low time frames just to make an refinement. So here we see have this lower low, lower high, lower low, break, and then breaking below. So it is like a trend trading. And first time I was looking on this level at the level which it is our trend level. As we know, we can break a structure but fail to break a trend. But currently I see we're going to break this trend, so it will be more high probability setup. Then when we go to more low time frame, here we see the same lower low, lower high, lower low, break, and then breaking below. Then 45 minutes time frame have this another elimination which it was already tested, but I have marked this level just to make sure my stop loss is above. As we know, we can come back to test for the second time. This is what I have on GBP CHF. Then after here I have this GBP NZD. GBP NZD from my side it is the same. Even you have hidden alarm this soon right here. It is I'm looking for selling opportunities recently, and I was just looking for this counter trend opportunity, but it was not validated. So if you remember from starting of the week, we had this selling opportunity. I shared it even in the story on Instagram. We discussed it right here. So it was the first entry, and then after having a break, we got the second entry. And then you have got this lower low, lower high, lower low. The movement to test a lower high and then lower low. So thinking like you can get a counter trend of same price level and still creating series of more lows. But let's go into low time frame. Here, after having this bullish candle, it is where I was thinking like we can get a bullish move. But again, I was thinking like we have to break above a certain price level here into the low time frame. Then here it is 2-hour time frame. 2-hour time frame was expecting to get a new higher high so they can have a break of structure, but we didn't get it. Then again on this 1-hour time frame, which is one of the time frame which makes us look for buying opportunities because of this diminution, but I'm very sure it will turn to inverted diminution soon. So the area was looking to have a break it is this one, but it didn't manage to break. So as we didn't manage to break, what I see is we are going to break below, and after breaking below, we have two areas of concentration. The first one, it is inverted diminution, and the second one, it is this trend trading level. As we see lower low, lower high, lower low, break, and then breaking below. Let me mark it right now. First, I will mark this inverted diminution. I'll mark in another time frame so that I will not get an alarm now. So and then this 45 minutes time frame, we see we have this diminution on almost the same level, and then you have this 30 minutes time frame. Again on this 20 minutes time frame, you have the diminution on the same level right here. For this case, up to now, I can say I will take this one. I'll take this one. For this case, up to now, I'll say I will take this one. And just setting my stop loss above this structure. Just setting my stop loss above this structure, and I will use the same target as the previous entries. I will use the same target at the previous entries. So what I can wait just here, it is just creation of lower low, getting the candle closure below, and then the correction, and then you can continue creating a series of more lows. This is what I see recently on GBP NZD. And here I have this Euro GBP. Euro GBP, from my side, I was looking for bearish movement, and it is this simple. I see here I have this starting of the trend, which is originated from these higher time frames. Let me show you from 12 hours time frame. Originated from this 12-hour time frame break of structure. So I was thinking like in case on this 12 hours time frame we get a break below, it can be a very strong indication. But up to now we don't have a break below, but I think it is a nice opportunity. We don't have a break below, but I see it is a nice opportunity. And it is simply because, let me show you into the low time frames. Here you have this diminution, but also you can go to 6 hours time frame. Here you have this lower low, lower high, and then lower low. And then let me go to this 4-hour time frame. We have this bearish candle, and then 3 hours time frame. We see here you have this starting of the trend, then lower low. Here we have this movement to create a lower high, and then lower low again. Then we can go to 2-hour time frame. 2-hour time frame, I saw this inverted diminution, but on the 1-hour time frame we have trend trading level. This one, lower low, lower high, lower low, break, and then breaking below. So after having this breaking below movement, and as we see on JPY basket, it looks to be in an indecision level. So we can get a confirmation on this level, and we can get a bearish movement. And that JPY basket, we can get a bullish move. So this is what I see recently on this Euro JPY. For my side, I have already executed risky trade right here now. So that is all. Then if we go to GBP JPY, GBP JPY from my side is the same as JPY basket. I mean the same, just on opposite with JPY basket, but also the same with this Euro JPY. And it is this simple: starting of the trend, higher high, then higher low, higher high, then higher low. Here I've created a higher high. So it can be a movement to create a higher low, but also one thing which makes us look for selling opportunity is you have this previous trend. As we know, our previous trend, it is the one responsible for main trend. So we have this lower low, lower high, lower low, lower high, and then lower low. So entire this movement can be just a correction to come and test on this level and create a lower low. So after realizing this, I started going into low time. I went into this low time frame to look for an opportunity. And here we see have this first movement, test of inverted domination, then lower low, lower high, lower low. So you have another domination right here with a validation price level. So here you have this correction and then impasse. So looking for test of this inverted domination, and we can keep creating series of more lows. Actually, previously I placed a bullish opportunity on this level right here, simply because of just knowing we can get a movement to create a new high, simply because as you see, have this series of higher highs. We can get more moves to create highs. But later on, after having just this 45 minutes candle closing below right here, I just realized that we are into a very strong bearish movement, and taking this price reaction as additional confluence. So I'd say to close right here after having this 45 minutes candle closure below. So currently, let's see on how the price reacts, but looking for that smooth correction to create series of more lows. This is what I see on GBP JPY. GBP JPY, this week you have got two trades, and I will explain to you one after another from higher time frame to low time frame. So at first, let me start from the 3 months time frame. Let me start from this 3 months time frame. 3 months time frame, we have reached this psychological price level, and we call it psychological price level simply because the main trend is an uptrend. Let me show you the main trend in FXCM server. Simply because FXCM, we got those data from previous years, not compared to Awanda. So GBP JPY. When you look on this GBP JPY 3 months time frame, you see we was into the downtrend, lower low, then you created lower high. Then lower low, lower high, lower low, lower high. We got this lower low, then movement to create lower high. Entire this move was just a correction, then lower low. So this movement was like a lower high, but you have a failure to create lower low. So if we haven't created a lower low, what next? It is you are going to create a lower high. So even if it is not a lower high of the general trend, it can be lower high of this current trend. So it can be a creation of lower high somewhere on these levels right here. The same was what happened on this previous market structure. We created lower low, then it like a lower high on this domination, then failure to create a lower low, it came to take this break of a structure. So what we got is just the movements to come and test on this upper side of the structures, and this price reaction right here, so that you can proceed with creating series of more lows. So the same to this currently price movement, that this price will not hold, this level will not hold the price. We get the movement up to a standard price level right here, and then you can continue creating series of more lows or change direction of the general trend. Then after seeing that into our FXCM server, we just see here it is series of higher high, higher low, then higher high, higher low, then higher high, a test to this validation price level and the creation of more highs. So even currently we are into just
psychological price level, which you can get a correction into the low time frames and is still breaking above. That is what you have defined the trend on this week. Then when we go to time frame like monthly time frame, it is the same price level with multiple structure. So we know if the structure is available from 12 months time frame, 6 months time frame, or 3 months time frame, that is very strong level. So even if it is not a level of reversal, it is that you are going to get a counter trend into the low time frame. Then you're going to get a counter. There can be a very huge counter trend if it is on 3 months, 6 months, or 12 months time frame. So on this monthly time frame, we see we have this recently structure with a small price reaction right here. Then 2 weeks time frame, we are coming from testing these levels as I explained it on this level right here, as how I explained it on FXCM server. And here we have got this price reaction to indicate that on this currently market, sellers are very strong. So there is possibility of coming back to this level right here, which it is validation price level, or even to come and test a reaction. Then after we go to time frame like daily time frame. So here in daily time frame, we see we have already developed the current trend, and it is very simple. It is very simple. Let me start from these levels here. It is very simple. We have got this low, high, low, then change direction of the market, then test of the structure. Then after testing this structure, we got creation of higher high. Then we got this movement to create a higher low. Then we got this creation of higher high, then this movement as creation of higher low. Then series of highs, then higher low again. Higher high, higher low again. Then we got this high correction to create a higher low, impulse correction to create higher low, impulse correction to create higher low, and then recently the bigger correction to create higher low again. And even currently have got this impulsive phrase, so we see this like a correction to create higher low. And we check for the possible levels to be ending of this correction. So the first possible level is on this diminution right here, and the second possible level is in this validation price level and price reaction. So we know we cannot wait for weeks and weeks for a price to reach on this level so that we can have a bullish position or looking for bullish opportunity. We have to look for counter trends opportunities. We have to look for these selling opportunities, though we know higher time frame trends are still into an uptrend. And when looking on this recently price action, here you have the starting of the trend, which is a downtrend. Then we got the lower low. Then we got this lower high, and then we created the lower low. Then lower high, and then we created the lower low. So after creation of this lower high right here, we started looking for confirmation that we are going into a downtrend and taking bearish opportunity. And that confirmation, we found it into the low time frame. That's was looking for a price not to get any candle closure above this level, and you didn't consider this previous market structure right here simply because just an internal structure, not the main structure of the trend, as it was formed before creation of lower low. It was formed before creation of lower low of the current trend. So when going back into this low time frame, like 4-hour time frame, so when going back into this low time frame, example this 4-hour time frame, it was very simple to connect high time frame with the low time frame, simply because as you see here, it was the starting of the trend, then you created a lower low, then this was just the movement to create lower high, entire this movement. Then after we got creation of lower low on this level right here. So after creation of this lower low, it is where we started looking for selling opportunity and looking for bullish shares very short term. So at first, our main confirmation that we are going into bearish, it was not found into this recently price action, and not found into this recently price action simply because we know if we found the reason for selling opportunity from this recently price action, selling can continue even up to these levels, edges of the market, and still being into the downtrend. So we look for selling confirmation from the previous trends and not the current one. Simply this current one is just part of the correction. We will get even a series of highs and lows and still being into the downtrend, or still not invalidating the trend. So our main reason for this selling opportunity was found on these trends right here. Here we got this lower low, lower high, lower low, then break off of structure. But this break off of structure failed to break the trend. And in fact, after failing to break instead we got the test of that trend. So after getting the test of that trend, you've broken below. So we got the creation of a trend trading, which is a bearish trend trading. So we got a very nice test on this level. So after having the first test on this level with the price reaction, that was our confirmation, we are going into bearish movement. And then after having this confirmation, we got the creation of lower low to confirm again that we are into a very strong bearish opportunity. If we could not get creation of lower low right here, we could not say that this is very strong selling opportunity. Let's take an example. We could get correction before creation of lower low. We're going to take this kind of a trade, but we got creation of lower low, and it is how we started the correction. And then we had this level, which it was our level of concentration, which it is actually elimination and break of structure into the low time frame, and we tested it. So after testing, we got this higher high, correction to create higher low, higher high, correction to create higher low, then higher high. And then it was looking for impulsively break to create a message on the market. But the reason why we didn't wait for this impulsively break, it is simply because we have more confirmation into the low time frames. And here just a simple concept about this kind of case scenario. It is this. In the market, you can have this kind of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And most of people are waiting to take counter trends after breaking the structure. So after breaking the structure, it is where they can start taking counter trend, whatever in the areas of liquidity, or they can start looking for counter trends on this break of structures, either highs of the structures or lows of the structure. But for most of cases, what happened is we got the break of structure, but if the trend it is still the uptrend, we can continue creating series of more highs. And the second thing is we can have the break of structure, which it is maybe 400 pips or 200 pips. This movement can have 200 pips. So after the bigger move, you have already missed the bigger move, and it is where you start looking for opportunity. So it can involve a lot of risk compared to looking at an opportunity before the bigger move happened. So what we did on this kind of a trade is we are looking for an opportunity to break the structure. We'll come to find the second opportunity after break of a structure. It is fine, but you already be into a very deep profit. So we look for confirmation, take a sell before we break this structure. Not like majority who always consider looking for selling opportunity after the bigger moves happen. So on this case, it was this simple. We got this series of highs, lows, highs, lows, highs, lows, highs, and didn't get any kind of closure above this level, and we got the impulsive phase. And this impulsive phase didn't even manage to break this level right here, which at that time it was our validation price level. And then we went into 2 hours time frame. And in this 2 hours time frame, it was very, very simple. Here I got the starting of the trend, then higher high, higher low. This was just infrastructure. And then higher high, higher low, and then higher high. Then after reaching on this level, which it was our level of confirmation, as I said, this level was found from these trend trading levels. We got this lower low, lower high, lower low. As we know, one of the very clean indication that you have got the new trend is creation either of lower lows on the downtrend and higher highs on the uptrend. So here after having this first movement, lower low, lower high, lower low, we started looking for selling opportunity. And in this case is, at first we started looking for like having correction up to this level, and it is where you can take an opportunity for a downside. But secondly, was looking if we create a lower low after this correction, we'll take this level as our area of domination, but also it will take this level as our validation price level. So what's happened is I explained this on market breakdown. It was lower low, lower high, lower low, then failure to create series of highs or lows. It means entire this movement was just a correction, and then this bigger bearish candle to create a lower low. So after creation of lower low, just mark our domination and you start looking for selling opportunity. Then when going into this 1 hour time frame, it was also very simple. After having this bigger movement, you got this correction, and then you left this inverted diminution. So it was looking like diminution, but after breaking below, it turns to inverted diminution. So we got the test of this level right here. But at the same time, we had this diminution on this level. So we was having two options. A is to take zero drawdown entry on this level right here, or to wait to just take a trade on this inverted diminution. For my side, I decided to choose this inverted diminution simply because when focusing much on looking for drawdown, for no drawdown entry, maybe exactly on the same point, and it is pending order, even market execution, you can end up missing an entry with just avoiding a 1 pip risk. So that is all. We have taken our entry on this inverted diminution, just tested. A trade was sent into the live trading room as well as into the community, and we got very impressive phase to create a lower low. So what I was looking is, after creation of lower low, I started looking for another selling opportunity. And after just creation of this lower low, simply knew a purpose of this correction was just to create a new low. We closed like 60% of the profit. We closed like 60% of the profits. And after closing 60% of the profit, we got this retracement to our entry. And after reaching an entry, I started looking for another selling opportunity. And simply because I have already got the move from the first entry, we can come back to this 4 hour. I will show you something. On this 4 hour, for this case, you already had the break of a structure. So it was another more clean entry and more confidently to take, simply because we know we are already confirmed that we enter the downtrend. And then again, when going into daily time frame was having this kind of price action, diminution right here. So this diminution from daily time frame gives us more confidence to take the selling opportunity. We know we have already created lower low into the daily time frame. We already left the diminution, and then we can come back to this 1 hour time frame. So 1 hour time frame, after reaching on this level, I decided just to wait and see what will happen, and then we got the rejection. But again, after rejecting, we got the next candle as a bearish candle in 1 hour. I was still on the screen and I was monitoring what happened. So I decided to go into this low time frame, and actually it was 20 minutes time frame. It was actually 20 minutes time frame. But before going 20 minutes time frame, here on this 45 minutes time frame, from the first entry explanation, also we had this market structure. We had this lower low, lower high, lower low. So entire this movement is just a correction. And after having this entire movement as just a correction, it tested on this market structure and then created a lower low. So that is all. And inverted diminution on this 45 minutes time frame, it is more clear. Then on this 20 minutes time frame, after rejecting, we got the bearish candle, which gives us a diminution. So I just marked the opening of the previous candle. We tested for the first time, second time, third time. I just executed my entry, and we got this very nice movement. Very nice movement. So this is how we got 2 entries into GBP JPY this week. Then another thing to add on this GBP JPY is we was doing all these trades by correlation with JPY basket, as they are they are correlating, they are into negative correlation. So from the first entry on this JPY basket, we was on this level right here. It was where we take our first entry on GBP JPY. As we know, in this JPY basket, you don't trade it, it's just a correlation index. So let me start explaining it from these highs. We know JPY baskets in the higher time frame, it is into a very strong downtrend. It is into a very strong downtrend, and as we know, they are negatively correlated. So GBP JPY a very strong bullish trend. So it is what we expect. And focusing much on this currently movement, we got this movement right here to test trend trading level, and we left this price reaction. After leaving this price reaction, it is a clean indication that you enter a very strong selling opportunity. But also, we left this diminution. It was firstly tested, and this is the second test, and also a test with the price reaction. So another price reaction on the current trend. But also here we created this movement to create a lower low. So entire this price action right here, it was just an internal structure. So we got the test of this psychological price level, and entire this movement was just a correction. A correction to do what? A correction to accumulate more liquidity, so that you can come and break these psychological price levels. So we got the movement up to this diminution level, we got the first test by price reaction, and after having this price reaction, you all expected that we must come back to free liquidity on this price reaction. As we said from the cause, these price reactions act as a magnet. So we got the first entry, the first testing. And after having this first test, we created a lower low and breaking this structure right here. And you had this psychological price level, which was having a reaction, which it is also trend trading level and inverted diminution in another time frame. So after having a test and then a break, we know it is a very strong level with enough supply of liquidity, and it turns into the supply. So we got this correction movement to come and test on this level. So when doing forecast of the first entry into the live on JPY basket, we was on this level of diminution. So I forecasted that we have to get an impressive move, and it is where I drew this. It is where I drew this line. So I forecasted just to have a bullish move up to this level, and it is where you can start creating series of more lows. So the time we had this bullish move, it is when GBP JPY we got that bearish move, and the time we got that bearish retracement, it is where we got this bearish move right here. So after having this bearish move, we got again starting of this bullish retracement. So on GBP JPY the same, we started that bearish movement. So we always consider this with this JPY basket just to have more confidence, when trading GBP JPY. Into this 2-hour time frame, the price action was more clear, coming to take this trend trading level, but also you have this inverted diminution level. So we got the test of the trend trading level, at the same time test of the diminution level. We got this lower low, lower high, then lower low. So even currently into these bullish movements. Then we go to Euro JPY, also the pair we traded this week, and I explained this pair on market breakdown live with members, live with trading room members, but also community members. When it comes to this Euro JPY, I will start just from daily time frame, simply because it was very open, very open, and very simple. From this higher time frame, I mean daily time frame, we know that we are into a very strong bullish movement. We know that we are into a very strong bullish movement with the series of the higher highs. Let me start on here. Starting of the trend, then we go to higher high, and this is just an intra-structure. And JPY and Euro JPY have a tendency of creating these intra-structures almost in every move. And then these intrastructures on Euro JPY have a tendency to hold the price, not like other pairs. And I say this simply because you have to be aware with characteristics and behavior of each and every pair you trade. So on this Euro JPY, you have a tendency of creating these intrastructures. And here we got starting of the trend, then higher high, higher low. On this movement to create a new high, we have got this intrastructure, and this intrastructure holded the price. So we got higher high, then higher low, then you create again intrastructure, then you got higher high, higher low, create again intrastructure, and then we got higher high, higher low. We have these intrastructures right here, and we got the impulsive phase. So I just knew this is just the movement to create a liquidation first, or to grab more liquidity for another impulsive phase, or I can say movement to create a higher low. After this higher high, we know what is next, just a higher low. And then I went into this 12 hours time frame. I know this 12 hours time frame is not common time frame to majority of traders, but for our side we always consider all these time frames simply because we know each and every time frame have its own message. And I say this to non-members simply because I know members, they always do this. They always consider, they are aware of all this information simply because all this information is available on the course step by step. So on this Euro JPY 12 hours time frame, it was having this intrastructure right here. It was having this intrastructure right here, which holded the price. So the first tests, this was just the second test. And after having this second test, it was just a matter of looking for confirmation. Let me wait for my charts to reload. So it was just a second test, and this second test was counting it as just a confirmation. So after the second test, looking again for another second confirmation. And one more thing is, was having this level right here. As we said, intrastructures, they have a tendency of holding the prices on this pair. So I marked this level as my point of concentration and point which I can take my partials. So here we got this kind of price action after approaching this level, which was our level of confirmation and level of concentration. We got this higher high, higher low, then very small high, and then you didn't create a higher low, and it was having some kind of pushes to an upside. So I went into the low time frame to find confirmation, and then on this 6 hours time frame, it was very, very simple. We got this break of structure, higher high, higher low, higher high, then a break. It is very small difference on these highs. Then also we had this inverted diminution, very small difference. So after seeing this kind of price action into 6 hours time frame, I went into 4 hour time frame, and here in 4 hour time frame we had this low, high, then low. So I started looking for selling opportunity. 3 hours time frame, almost each and everything was just the same, break of structure, and it was having this movement to come and test this inverted diminution of higher time frame. And in this case, it is where majority of traders get into wrong direction of the market. This is where most of people think like here it is an impulsive phase, then correction phase, impulsive phase, and then correction phase. So they think like we are going to get an impulsive phase again, maybe to these highs, or even to create a series of more highs. But you have to understand the market cycle, and you have to understand accumulations and corrections, but at the same time you have to understand market timing. And another more important thing, it is correlation with other pairs, correlation with other index with more clean market structure. So that was all. Then after I went into this 2 hours time frame, and on this 2 hours time frame, I was having this inverted diminution right here. On the time of doing analysis, I marked this inverted diminution, and we actually rejected on this level. But again, going into more low time frame, was having this diminution right here, this one, diminution of the current trend. So as we know, current trend is more strong and compared to the previous trend when looking for continuation. This is currently a continuation. As we know, we have this price reaction, then impulsive phase, price reaction, creation of lower low. So it is not a reversal, it is continuation of this trend which has been started. We concentrate much on this recently price action. So we had this diminution, and I went into more low time frame, which it is 45 minutes time frame. Nothing new. That inverted diminution also looks like inverted diminution, but it is fine. You have nothing to do with that. And into this 30 minutes time frame, almost in everything the same again. And into 20 minutes time frame, it is where we found our entry. 20 minutes time frame, we had this diminution of the current trend, diminution of this correction. So we got an entry. I explained this, and on the time of execution, at the time he was into the level breakdown. So we executed on this level, and we got this very strong impulsive phase. And again, after reaching on our point of concentration, that point of interstructure, we closed our majority of our positions, but also shift the stop loss to entry. We closed majority of our positions, but also shifting a stop loss to entry. So this is all about Euro JPY breakdown. Higher time frame into an uptrend, but looking for these counter trends and how to dance with the price when into the correction, so that we can get all this kind of movement, upside move, correction move, and with very low risk, with high risk to reward ratio. Then here we have this GBP NZD. GBP NZD is one of the very clean one of the very cleanest trades on this week, and I explained these trades step by step into market breakdown. So starting from higher time frame, let me show you on price action and what is trying to tell us. On this weekly time frame, we see market is coming to test this level, which from the previous trend is inverted diminution, but also on this current trend which we decided to concentrate on, it is just a diminution, and you got this very strong price action. Then after we had this higher high, higher low, higher high, higher low, higher high, and entire this movement was counting it as just a correction. And even up to now, we haven't created a new higher high. So I said to say maybe this can be a movement to create a higher high. Maybe this can be a movement to create a higher high. But as I said, entire this movement is just a correction move. So on my maybe thoughts, I came to concentrate with this currently movement. And here it was higher high and then higher low. Then we got this movement right here as higher high and then higher low. Then we got this very small market structure and then highs, lows. So we got this bigger movement to test that price reaction again. As I said, price reaction acts as a magnet. Then as we know, market is not moving in a straight line. So after having this higher high, we know what next? Just creation of higher low. And the point which we are looking to have creation of higher low, it is this area of diminution. Though we know we can get a movement up to these price reactions again, it is fine, but this is our first level of concentration. Then after knowing this into the weekly time frame, it is where I started jumping into low time frames to find more clean price action and more clean message on the market. Then on this daily time frame, first we have this break of structure to indicate that sellers are very strong with the diminution within it. And then after this first movement of the trend, we go this correction. We will see where correction have ended into the low time frame. So after having this correction, was looking to create a lower low, and we created it, a lower low. So after having this lower low, started looking for retracement, which it is a retracement to create a lower high. So from the daily perspective, we don't know where will be the true ending of this correction move after this impulse. we can think like it can come even up to this level and still being bearish, or it can even be part of this correction, as we can get even a movement up to this level and still being bearish. So we just know into the daily time frame we are into a correction move, and anytime soon we can get another impressive phrase to a downside. That is what we take from the daily time frame. Then after we go into low time frame, so that you can make decision while we think long term on what we have seen into the daily time frame, but you can make decision on what again we see into the low time frame. So on this 12 hours time frame, it is where we got more clean messages. It was like this: impressive phrase to create a lower low, then correction, then creation of lower low, and then you had this internal structure. And this internal structure was accompanied by this trend trading level, which it is the second case of trend. It is, the third case of trend trading into the trend trading case scenarios into the cause. So we tested this level and left a diminution. So after lifting this diminution, we had the test of the diminution, where we was doing our breakdown when we got the first test of this diminution. So again, the first test of the diminution was by reaction. So we take this reaction as just a message that currently sellers are very strong to the markets, and not just testing of the diminution. It's simply because diminution aligns with the trend, but you didn't get even the break of the market structure to indicate that sellers are very, very strong into these markets. Then here into 9 hours time frame. 9 hours time frame, we had this diminution, which it was successfully tested by this correction. And after testing of this diminution, we got this movement, which this is our low, then high. Then we got creation of lower low, then testing again of the diminution. And then after testing this diminution, it is where we started looking for selling opportunity after the first test. And the reason why we was waiting for at least the first test to look for selling opportunity is due to that higher time frame trend that was knowing you can come even up to this level and still being bearish, but also you have to wait to see more clean picture into the market before making decisions. Then we go to 6 hours time frame. And in this 6 hours time frame, almost each and everything is the same. We have this price reaction, testing of diminution, we have this lifted diminution, and one more thing, we are just out of this psychological price level. So I started looking for selling opportunity on this price reaction. And we have this very bigger price reaction. So you have to know you're going to take a position on this level, this one, this, or any price level. As I remember, even one of my brother into the community asked me a question about taking consideration about this price reaction and finding entries. So into the low time frame, we come and find we have these market structures, correction, internal structure, then some sort of correction, and then impressive phase to our entry. And we go to an execution, then boom, bigger impressive phase. But one more important thing is we settled our stop loss about this price reaction. So because we know we can come back to the same level and still being into the bearish move. And another thing is when coming back to this 4-hour time frame, we had this break of structure. I've seen Brother Solomon have an entry on this level. He shared it even to the community. So we got this break of structure, which also aligns with the diminution. It was just confirmation that our first entry was right, and we have to continue holding. Then when going into this time frame, like 9 hours time frame, again you have another diminution. Then 6 hours time frame, the same diminution. It was successfully tested. So it was just confirmation within confirmation. It was just confirmation within confirmation. It was just confirmation within confirmation. And then currently we're just counting as this is lower high, then lower low. then lower high, and then currently have got lower low. So even right here we enter correction, though we know majority of people will take this as bearish indication instead looking for bullish opportunity. But for us it will be completely different, and we'll keep looking for more bearish opportunity. Then again I have this GBP CHF. GBP CHF, if you remember, trade from the previous week. If you have not checked all these trades from the, if you have not checked this first entry from the previous week, just check your previous video on this YouTube channel. So after this first execution on Monday, I started looking for counter trend opportunity. As I said, market is not moving in a straight line, but as market is not moving in a straight line, you have to understand a lot of mechanism about how the market moves, and not just a lot of mechanism, but also a realistic picture of the market. Everyone will say lower low, lower high, lower low, lower high. Everyone will say impasse, maybe correction, impasse, but you have to understand the overall mechanism and how the market moves, and you must have the set of principles on how you are going to take this counter trends opportunity. Not every low, if you get the series of lower lows and lower highs like this, not every low qualify to take counter trend opportunity. Not every high can qualify all criteria to take a scaling opportunity. Not every lows again can qualify all criteria to have counter trend opportunity, simply because we know we don't have to expose ourselves into unnecessary risks. So after this first entry, I started looking for counter trend opportunity. I just knew this counter trend, it is very possible to end here on this diminution, simply because we see here at the starting of this, when we concentrate much on this current trend, we know here it is the lower low, then lower high, then you got the lower low, so you're going to create a lower high, and after creation of lower high, you're going to get another movement to create lower low, which you already have it right now. And we all know that here have this kind of price action: lower low, lower high, lower low, lower high, lower low. When I say market is not moving in a straight line, another person can think like, we already have this series of lower lows, so why we are supposed to get a counter trend movement to create a lower high again? But as I explained on the previous video, it in this way. When we say market, it is series of impulse and corrections, means this is very basic things. I try to explain this video in very basic way so that everyone can understand, simply because we share them to public. So it is in this way. We got an impulsive phase, and then we are going to have a correction phase. But on this impulsive phase, again, it is not series of straight candles, straight bearish candles. So we will have series of candles of bearish, bullish, bearish, bullish. So if we know we have a series of bearish candle, bullish candles, we are going to have a series of lower lows and lower highs, but just in a single impulsive move. So we can break these infrastructures and have a correction move. So it is the same right here. Entire this movement is just a single impulsive move. Even these are parts of the impulse. So then after it is where we got this movement as a correction move. And the other thing is, when you say correction move, most people have already claimed like after the impulsive phase, we are going to get series of very small candles to a certain price level, and is where you can have a respect and continue to the downside. But on the currently market, you have very high volatility. So it is not like getting small candles or some textbook candlesticks or textbook patterns. It is like understanding the general direction of the market and understanding where there is enough supply of liquidity, where are the strong levels for a price to hold. That is all. So on this GBP CHF, looking for this counter trend opportunity, it was very simple. I passed you through different time frames to find a strong reason for me to take this bullish opportunity. And I found a diminution. Let me show you from this 3 hours time frame. First, here we have this price reaction. It was originated from this break of structure, and then from this market structure. Again, we got this second price reaction. It was on Friday. So after having this second price reaction, it is where I started looking for confirmation to go bullish, because I know when we have a strong structure like this one, we rejected an area into 1 time, 2 times, it symbolizes that it is very, very strong level. So after knowing it is very strong level, I started passing through one time frame to another, looking for a very strong confirmation for going into this counter trend. So 2 hour time frame, nothing new. I went into this 1 hour time frame, nothing new. I went into this 45 minutes time frame. I found this very nice diminution. So just setting my stop loss below most recently candlestick and entering the diminution, and then boom, very strong movement. And again, after this movement right here, after this first impulsive move, we got this. This was just a correction, and then it created another impulsive phase. So after this impulsive phase, we had another opportunity right here, which it is a break of structure, but also have this diminution. So after having this kind of case scenario, it was an opportunity to take the second entry. But from my side, simply because it is just a counter trend, and we have this selling opportunity still running, and we have another entry right here. I suggest to mark this level and wait, not to add any position. So we got this counter trend up to this level. We closed our positions and looking for selling opportunity. Actually, I didn't get any selling move, but right here, we have this price reaction. We got this second test and then impulsive phase. So this impulsive phase, I started looking for selling opportunity on this break of structure, which is also diminution into the higher time frame. So here we have got this first move to come and take this inverted diminution, and currently still I didn't change my bias simply because I know it is not safe looking for selling on this counter trend. So my mind is still on this level, but I will explain more deep into the weekly market breakdown. I'll explain more deeply into the weekly market breakdown, that what is possible move to take and what you have to wait and everything else. I'll explain them into coming weekly market breakdown. If you find this video useful and insightful, make sure you like, comment and subscribe as more videos are coming. But also you can access more videos like this into our application called IntelligenceFx app. It is available for free into an app store as well as in Play Store. So download it, enjoy a lot of contents, and upgrade any time to access our live training room or our courses, which comes with weekly market breakdown, mid-week market breakdown, every week trade recaps, and daily market breakdown. Ready to take your trading career to the next level? Don't miss this one. Thanks.